All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you're not done so already, please give the video a thumbs up. Don't forget to like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. We still have a summer sale going through next Friday if you're interested in that. 60% off active traders in our live day trading room. 40% off of all courses and 30% off of swing trades for your first month. So get in on that while you can. We're killing it this year. Anyways, let's get into it this week. So last week, you'll recall, we talked about this, the positioning in the market here. And, I've been warning about essentially QE, and we're in a fiscal, dominance regime here. And, we have essentially QE coming from the Treasury. And you're seeing it right now already. So it's starting in quarter three. Besant telegraphed that, a month or so ago, and they reaffirmed it a week or two ago. And the market, it doesn't need much. As soon as it sniffs out liquidity, it doesn't matter if it's there or not. It will start to front run that, and you're seeing that. I believe that's a lot of what this rally was here. And we talked about not fighting this tape here and letting this, staying long on the charts. And we now have another new all-time closing high for the S&P, the Qs, and the Dow is very close as well. We also had a nice rebound from the Russell this week. That is breaking out above the 200 moving average on the weekly. Still got some resistance up at the 225, 230 area. So again, we've been warning about this. A lot of people have been trying to short. We talked about it this last week. A lot of macro shorts out there. But I want to just draw your attention. We have a little bit of a change here. So if you remember last week's video, I talked about the positioning here in the ES. NQ did dip a little bit here, and retail did chase last week. But, banks here in red, very, very long the market, everyone else short. That's usually a good sign that you want to be long that asset. And obviously that has been the case, right? So this is when they got long, this is when everyone else got short, right? And they've just been going up. Now, this data here does not include, so the COT, because of the shortened week, this does not include this. It won't be out until Monday, so I won't have an update here. I also referenced for you guys last week that the NQ is the only index that saw a little bit of profit taking from banks and retail chasing. And this week, the NQ actually underperformed. So that's definitely, it's definitely reflective of what we were talking about last week. However, before we get over here, I'll just flip back here. On Friday, Thursday, we're going to look at the futures here. We basically had a euphoric move here. This is definitely a sign of, to me, forced buying. And if you're not familiar with what that is, essentially, funds that were, very much short or hedged going into the jobs data, and they were probably short this whole way up too. Essentially, they just get squeezed out of their positions and they're forced to become sellers. Essentially, they're getting stopped out, right? Look at the SPX here intraday. Right, I mean, just a straight up move here, and then obviously you're seeing these after hours those don't count, but we basically just went straight up here after already an enormous rally in just a week or two, or really like 9 days. That to me was indicative, and I was actually really not thinking much of it in the morning. And I said even to my members, like, hey, we'll probably just gap up and just pause and just sit around here, maybe do some retracing. But we kind of just had this euphoric move intraday, and I said, this is a little, it's getting a little long in the tooth now. So to me, you're seeing short capitulation, right? Which means the market can possibly see some downside. Now, I want to show you here what data we got later that day that essentially confirmed it. And you can take a look at, well, this actually came out yesterday morning, but AAII bulls jumping big time by 10%. Bears dropping to their lowest level in a while. Moreover, NAAIM, this is actual fund manager exposure, is the most long since December. So they're more long than they were in February, when right before we had the collapse. And the last time they were this long was December, and then really July, and then March, late March of last year. Let's look at the charts here. So we'll go back. February, that was end of February. December 11th was right there, right before that sell. And we go to July of last year, right before that leverage short vol, dollar yen blow up. And then late March was right before that April sell. So we're definitely at a position now where bulls have lost the advantage of having massive amounts of short sellers trying to fight a strong tape. And I think we're seeing some capitulation. So that, to me, says this market can have a pullback now. Now we are going into a period that is seasonally very strong. Typically the week, a couple of weeks leading up to July OPEX, which is the 18th, are generally, seasonally very strong. That does not mean we have to go up. It just means that dips will likely get supported. I wonder, though, after that, could we see an actual corrective move? So just something to be aware of here. My kind of stance right now has been to maybe harvest gains, advanced stop losses, things of that nature on the long side, and just be ready for a some sort of corrective event. It does not mean to sell everything. It doesn't mean to dump your 401k. It just means we've now lost that favorable positioning here. So 6,100, 6,000 would be logical retests on the downside. Those would just be your short-term levels. If we were to go down, we could still go up to 63. Who knows? Maybe even 6,400. But personally, my official stance here is that risk reward is not good on the upside right now. So I would just say yellow flag here. Be a little cautious. QQQ. Again, it was up on the week, but you're going to notice it was not up the same that the IWM or the Dow or even the SPX was. So we saw that positioning shift there. Obviously here, our trend lines here, I would just say 530, and then obviously the 540 kind of support are your just short-term supports on any sort of retrace. IWM, again, we talked about the 225. That was the breakdown there, and then 230. So I think this could still see some upside. If there's any index that has upside now, it's the Dow and the Russell. I think technology is a little bit weaker. You could see some rotation maybe into healthcare, some other defensives, things like that. Certain areas that haven't had a run yet, I think could get a run. Apple's a stock I've been talking about a lot lately, and we were accumulating this down here at the lows, and that's had a nice bounce here. Just a lot of things that are playing catch up, I think, can still run here, but a lot of the momentum trade is starting to unwind. For the downside on the Russell, 210 is an important level to hold. The diamond here, obviously your double, triple top there, 450 area, and then your big support is, we'll just call it 428. We'll just say 425 to 430. Semiconductors, not quite at an all-time high, or I think maybe they did. Okay, they did get an all-time high on Thursday. So, yeah, new all-time high for the semis, a new all-time high close. And I think we close above that 283.07. Yep, we closed above it. So SMH, congrats to those bulls. That's been in a corrective period for a while. SOX, though, not as, it's a nice chart, but it's not as close to the all-time high. Remember, SMH is very overweight NVIDIA and Broadcom. So SOX is a little bit more diversified. It's a more broader picture of the sector. IGV, you guys know I love my IGV. New all-time high, new all-time closing high. Transport's also rebounding this week. Or I should say continuing to rebound. And they went up to look at this. Love technical analysis. You got to go back. Look at that. So there's your trend line there. Probably not drawing the best. But nonetheless, you get the idea. It went right up there, went right to that old yellow line, and then look at that, pulled back on Friday. But still up nicely for the week. So maybe a little bit of resistance here for the transports. Got to do some consolidation to get through that. All right, let's flip over to rates. So a very interesting week here. So I didn't talk much about this, but we had a jobs week, and we had basically a crash. in ADP employment. So it was expected 99K and we did negative 33. That was the same last month. Now, the jobs report, the government report, guess what, right? It magically beat, right? And it's funny because this was when the ADP report came out. I think it was Wednesday. Yields actually went up when that number beat. So that was a tell right there, right? If jobs missed by 5 sigma, then yields should be down, right? But they're up, so it looks like smart money knew that this was gonna back off and go the other way. So the 2-year here is it's still holding up, right? Look at this little trend line. It's actually kind of reclaiming that. This makes it tough for a July cut now, right? At one point, I was looking we were going to go to the lows, and if we did, I would say July cut's definitely happening. But it's probably like on the table now, more like on the fence here. The long end of the curve still holding up pretty well. So rates staying sticky as expected. XHB, beautiful breakout here. And I've been talking about this on my channel. I like this little pattern here, and that had a huge move on Tuesday to the tune of about 4.5%. I still like VNQ and IYR, same kind of thing here with this weekly pattern. So there are some catch-up plays here. I think if that can break bull, that's got some upside. XLF, new all-time high, new all-time closing high. Another one, KRE, has a similar pattern, right? Nice little consolidation. Looks a lot like the IYR weekly, the VNQ weekly, right? So nice base there. This one broke out, so we'll see if some of these laggards can do the same. But nice job for regional banks, large banks, and of course everybody's favorite broker dealers finally closing above 1,000. What a chart! Look at this. Robinhood at all-time highs now, and it finally got above that IPO pump and dump price. Anyway, oil, it got a little bounce here this week. So again, heavily shorted sector, heavily shorted commodity. I still don't love this pattern. It's just too sloppy. I would be interested at 62 if it got down there quickly though for a little trade. But right now you have a massive funky reversal here, an attempted bear flag, a break, and maybe if it can put in a pattern, it could try to like zigzag again. But I just don't have enough on it to do anything with it right now. XLE, however, that did catch up again this week. Take a look at Exxon, nice move on Friday. Chevron, we also have XOP and OIH. So now we have in these energy stocks, energy sectors, like again, higher lows. If we can get another higher high here, you've got, and this the reason why I like energy here is, looking at XLE, I think worst case scenario, this ends up being a dud, but best case scenario, you look at like an Exxon, which I still own some. If this pattern breaks bull, kind of like it did here or kind of like it did here, you're talking about a huge move. So I think if energy does eventually catch up, I know it's super hated. There's a lot of upside here. I just don't see a ton of risk here being long either, at least in the major producers, but we'll see if it ends up working out here. But we need to shape up those daily higher highs. Cameco holding up well too. URNM trying to base I don't love the gap here, but chart looks fine. It is basing a lot of resistance up here, so it needs to do more of that. It looks like it wants to go higher as of right now. URNJ, same thing. That chart's not bad. And then we got nukes here, just off of all-time highs. So uranium sector remains strong. Nat gas backing off a little bit this week. That might be cooling off for the back half of the summertime. Dollar index having its worst start to the year since 1973. And I was surprised with the hot jobs number yesterday that we didn't squeeze more. So the dollar still has very, very crowded positioning to the short side. So any sort of catalyst here could cause a squeeze. but this is, you know, it's not going up with yields, right? And that's sort of the big structural problem. Gold here, again, holding up well. And we back tested this trend line effectively. We had some members pick this up actually in the trading room earlier last week and got a nice little gain on that. I don't see any issues here. I don't see any problems. The only thing I would say right now is that just from a dealer standpoint, I don't have the numbers in front of me. I've talked about it on my channel, but for GLD, positioning through like September isn't as strong as it was through June. That doesn't mean it has to go down. It's just a little bit more neutral. It does get better towards September though. So we might see a little bit more extended consolidation here. You can see GDX looks good. No problems there. So as long as the miners are leading and holding up, that's a good sign. Silver curling up here. Again, nice weekly chart. Pop, 1, 2, 3 pullback. Right, and that's inching up. That should get to 40. Platinum continued to tear earlier, late last week. Tried to continue the other day and now just kind of chopping around, but right off the highs. Palladium, nice bull pattern here as well. So these have really turned around. You guys have been, I've been pimping these two for a long time, and they may be finally getting going here. Copper, a little sloppy action, but ultimately just fine there too. Lastly, Bitcoin. We had a little bit of alt. Yeah, I think ETH was moving a little bit on the other day, but we did back off here. Yeah, Bitcoin just off all-time highs. I think I was saying earlier this week, I don't love this little pump here. They always seem to pump Bitcoin right in front of the holidays to get everybody talking around the grill or around the dinner table. I would have preferred if we had tried to have one more. It just doesn't look like a complete pattern to me. So we'll see if this ends up playing out or not. But right now, 106 is your short-term support. If that fails, I think we go back down to this lower, maybe 99 or 100, and possibly even to the lower end of that channel. But overall, yeah, it's still pretty healthy. It looks good, in the bigger picture. The weekly chart looks great, right? This is a nice pattern here. It's nice and healthy and strong. So no issues there with crypto. Overall, yeah, I would just say right now, as far as equity markets for a swing trading standpoint, positioning is definitely no longer favoring the bulls. I do think it looks like a lot of hedge fund shorts got squeezed out. I will be watching for that data on Monday. But yeah, definitely be a little careful up here. This was a parabolic move after already like the sharpest rally. I mean, look at, you go back to the pandemic here. Because I now delay the end of this video here, trying to get this up here. But yeah, look at the angle. It's even steeper than this was. So yeah, just be a little careful here. Positioning definitely got squeezed out. And that's been my edge this whole way up, is that people have been shorting the rally, which creates more short seller fuel. I think that may be extinguishing here, so just be aware of that. But anyways, guys, I'll wrap it up here. Again, you guys take care. Have a great 4th of July weekend, and I will see you guys all next week.